There's been a lot of noise on the euro dollar in the last few days because of the weakness that's been happening. But if you look at the bigger picture, guys, the last time I traded the euro dollar was this trend here. So this is 1, 2, 3, 3,500 pips that price fell in that period. And if we look at what it's been doing since then, it's just in consolidation. This is that little bit of weakness that everyone's been getting excited about. But if you look at the bigger picture, it's in consolidation and we're inside the pink lines. If we look at the weekly, we're below the weekly 200, we're below the daily 200, we're below the weekly 50, we're below the daily 50. So we do have alignment, but let's look a little bit closer. Remember, moving averages are lagging indicators. That means whatever price is suggesting, the moving averages will follow based on price. So why are moving averages good? Moving averages are good because they confirm what price is telling us. Where a lot of people go wrong, and this is a very big mistake, is that people use moving averages as leading indicators. So for example, whenever moving averages cross over, they use that as a sign to get into a trade. What you want is for price to dictate when to get into a trade, and that moving averages are simply there to confirm what price is telling you. So let's have a look at the 50 moving average. It's flat. If we take it back to when price was in a trend, you can see it was heading down. If we look at what the 50 moving average is doing now, it's flat. And if you look at price, it's just consolidating. If you look at the daily chart, if I just compress it, look how flat the 200 moving average is, which is the black line. Look at the 50 moving average, it's just going sideways. If we go back to when we were in a trend, look at how it was acting as a level of resistance in a bear trend and how the 50 moving average was heading down, how the 200 moving average was heading down. Now it's in consolidation, it's just flat. And so for that reason, you don't want to be trading the euro dollar. I know it's the most heavily traded currency and there's a lot of talk out there, but think about it. If most private traders lose money and most of them are trading the euro dollar, what does that tell you about trading the euro dollar all day, every day? It's not how it's done. You want to learn to manage a portfolio. So going back to what I was saying, the euro dollar is not interesting because it's inside the pink lines and the moving averages are flat.